Hello and welcome to another edition of Coffee Talk, kind of a special edition as we enter April. It's tax season.
Oh yeah, Brent, it's tax time again, and all of us are getting, actually got an extension.
We did.
Into May to pay our taxes, so you still have time to make that IRA or your SEP contribution, so make sure you get those in before you have to pay your taxes.
So we wanted to go over a few things that may be beneficial to you as you're getting your taxes completed or as you're looking into planning for tax season that may help you along the way.
Yeah, Brent, you know, right now in our industry, the main buzzword is increased taxes.
Right.
Everybody agrees that because of the amount of debt that the government has, the taxes have to increase. We're at the lowest point in the U.S. history as far as where we are in taxes.
Absolutely. We did a workshop not long ago where we were talking about during the World War II era, taxes actually reached a 96%, 94% threshold. And that means that 6 cents of every dollar is what you kept.
Yeah. And you know, right now, the tax proposals that are being proposed by the new president don't really affect a lot of our people, but they will affect them as we make more and more changes. One thing that we need to be careful of in looking at the new tax proposals is that while I know that they're talking about increasing taxes on everyone who makes over $400,000, and that's a high number, doesn't affect a lot of people, but it does affect some of our clients and some of the people who are listening to this. But they're also talking about the step up on inherited real estate.
Yeah, share a little bit about that. That's interesting.
Yeah, because right now, if I die and I pass my property on to you, you get to take it at my basis.
Okay.
And then when you sell it, I mean at the present basis, the basis as the day I die.
Right.
So when you sell it, your capital gains is only from that time to when you sell it. Under the new proposals, you won't be able to get that. You'll actually get the cost and when I bought it.
Right.
So you will have a tremendous capital gains.
So if you've had the house for 30 years,
Yeah.
I won't get the benefit of what you paid for it 30 years ago. I'll have to pay capital gains on what it valued at when you passed away.
That's right. And a lot of our people, you know, have 100 acres or a farm. And so now when they sell that, if under these proposals, then they're going to have to pay taxes on that. So this isn't in effect yet, folks, but it's something that's being proposed. It's something that's going to affect all of us. And you need to be aware of it so that we can take measures to kind of counteract that.
Well, and although they haven't really talked about our individual tax rates, I know that's capital gains and stepped up, but individual tax rates could likely go up, even though that hasn't been talked about yet in great detail.
Well, we haven't hit the lower numbers yet, but we will
Right.
have to move that down. Our debt through December 20th had increased 198% since 2008.
You're talking about the national debt.
The national debt. So we were at like 150 something trillion dollars.
Right.
Now, a trillion is a large number.
Very large.
Very large number. And so, you know, that's a lot of debt that we have to pay back. Now, and since December, we've had this tremendous amount of stimulus debt. The infrastructure debt they're talking about, the additional stimulus money, the checks that are going out, all of that has to be paid. Plus, right now, our proposed budget is $660 billion a deficit where we don't have enough money to cover what we're spending just in the government this year.
Right, and some of the ways that they're implementing those ways to pay back or get more taxes had already taken place with inheritance. So if you were to pass away and your estate went to my mother, then she could take that out, or on the qualified account, she could take that out over the actuarial part of her life, or as long as she lived.
Right.
When it skips the generation and it goes from you to me, then I have to take that out over 10 years. So children have to take it out over a 10-year time span. Really, the reasoning I see is that it allows you to have to pay taxes on that money, and the government gets that.
Right, the government gets their money faster because it makes a lot of difference whether I look at 10 years or 20 years or 30 years. So it makes a big difference in the amount of money, the amount of debt, the amount of liability that we're leaving to prior generations, future generations. So what we need to do, folks, is we need to sit down and talk. Well, now is tax season. You're doing your taxes. You know where you are tax-wise. Roth conversions are certainly something that we're looking at. Also, life insurance. I know when I say life insurance, everybody turns off. You don't have to die. You don't have to die to get it nowadays.
Right.
It's also good for long-term care, terminal illness, and it's also a tax-free income. But it will also give you that buffer should you pass away, so that the taxes can be paid that are going to be left.
Right. It just shows that there's a tremendous need for planning and looking ahead. And I know we've been reaching out to our clients as well. But even if you're not affiliated with us or associated with us, we'd love to be able to talk to you and give you some advice and let you know how you can better tax plan for the future. It's not just going into this year, but there's a lot of things that are incurred as you go into your retirement years and beyond that you need to look at when taxes are concerned.
Yeah, and we certainly want you to set up an appointment so we can talk about that. Go over your taxes. Make sure there's not some way that we can save you some taxes, but also be aware of these new laws and be ready to react whenever we get them implemented.
Absolutely. We hope you have a great day, and if you have any questions, give us a call at Gulf Coast Financial Services.